All right, everyone, welcome back. We are live. I'm sitting down today in Montreal with Alejandro, who's in Mexico. What's up, Alejandro?
Hi Etienne, how are you?
Fantastic, fantastic. So we've been chatting before. We've been planning some stuff to teach you. I want to talk today about something special, which is algorithm trading. So you guys know that for some time we've been trading algos. Me and Alejandro, we've been trading some algos and stuff. That was pretty cool. We want to kind of share some lessons because I don't have any interview from traders this week. We'll have more next week. But for now, I kind of want to go back and kind of reflect a little bit in the past few years of my trading. It's kind of share what I've been learning the hard way. These are things that you don't learn like easy. They take some time to learn. And I want you guys to kind of go in the chat. Let us know you're watching this live. I would appreciate it. We have Lise Marie. We have Gerald, which is awesome. You guys are welcome to be here, of course. If you have any questions during the live, just comment below in the chat. Let me know that you're just comment there. We'll see your question. We'll answer your question pretty fast. It's gonna be interactive, of course. You can pretty cool. Can you kind of tell people who you are, just a bit of background about yourself?
Oh, yeah. Well, I'm Alejandro Perez. I am a trader from Mexico City. I started trading in 2012. Yeah, I think. Yeah, 2012 after finishing high school. And between my period between high school and university, I got my first trading account with the money I saved for basically one whole year, which was $1,000. And then I doubled I doubled that in around 3 months. And then I lost all that and was left with a $50 account in 2 weeks after that. I doubled the account. So it was a pretty wild ride. And from there, I kind of was a bit, disillusioned with trading from there. But I always kept going back, like during all my university studies, I kept back to trading all the time. So I started to get more and more in depth, and I always started to go there with after the first big loss like that, with proper and with really conservative risk management. And then from there, I started working. I went in the academy in 2016, I think, no, 17. At the end of 2017, I started in the academy. And from then I did some changes in my trading, and then we started working together in the trading assistant and automating your trading strategies. I think it was around July that we started to work on that together. And then I officially joined the Decide to Trade team on September last year. And I have been here helping in the back office and helping in the mastermind calls with all the people in the academy. That plus I have also been developing my own trading, discretionary trading, and also algorithmic trading in that whole time. And now I'm currently in the point of looking for clients to manage money for them. And I am working right now under the umbrella of a company here in Mexico City, managing money for clients and looking for the regulation parts.
Exactly. This is awesome. So I must say that I'm not an expert at creating algos or coding algos. Far from there. In fact, the one who's been doing the work, the most of the work for me was Alejandro, who coded everything for me, which is like really cool. And so he knows more than I do on that stuff. I think I've learned some things, of course, 'cause I still trade algos and stuff. But that's why I wanted to bring him here today to kind of talk about these lessons. And there's gonna be 5. You can take note of this if you want. We can put some notes below if you want also after. I'll put the link for the academy and the training assistant, which we developed together, below if you guys want to check it out. One's to get to learn, the other one's to learn. But that's going to be below, of course, link there. Okay. So I kind of want to start on these lessons. These are going to be useful. I feel like some Adriano's been seeing more than I did. Some I've seen more than he did. So we kind of go through that list. And the first thing I want to say is I used to believe in the fact that algos were kind of a way to reduce the workload, and it's kind of true. But you got to understand the fact that if you want to jump into algos, like there's still a lot of work involved. It's gonna be different work, but still gonna be work. So you got to figure out like what is your goal with algos. Do you want to have like less work, or do you want to just kind of be in the beach and have fun all the time, or do you want to kind of find a way that you have a different part of work, so you work beforehand, and then you can do something else you want after. It's not less work; it's just a different kind of work. So you gotta have some things to do that you don't do before. You gotta have some things to do that you don't do anymore, and that's just gonna be kind of how you do it. Okay, so if you think that it's just a way for you to kind of go away from work and having a living on automated, then that won't really work. Okay, so I'm sure Hannah can relate to this. Like for you, kind of, what was your idea of like going to Algos? What did you want to them? Was it because I pushed you to?
No, it was actually, I started playing with Algos since probably the beginning of my trading. After I lost the money, my first account, and I started taking things more seriously and trying to learn other things while I was still in uni. I started looking at Algos because, well, I wanted to be able to trade, and while I was still in school, even though I didn't pay much attention to classes, because most of them were repetitive, I still was like, okay, maybe it would be a good thing to have something that could place trades, and then while I'm in class, when there is a pause or something, that I could check them and then manage that. So I started like trying to automate strategies found online, in forums like Baby Peeps and that. And then I come across a couple of tools that help you do that without learning how to code. And then I started doing those basic things and testing, and none of them work properly. They all were losing systems, but probably just because I didn't understand exactly what it takes to be an algo trader, right? So I just basically just like programming random things and putting them into the wall and seeing if it worked or no. But yeah, that was like the start of my algo part. And then with time, I started to see, okay, these tools are useful to get the basics without coding, but I need to put in the code or change some things to do those extra filters, right? Or to do those extra things that can differentiate between making a strategy good or just making a meh thing that is cool to have, but doesn't really produce any results for real trading. So that's how I started in that world. And yeah, at the beginning, I thought it was a way to create a system in which I could just put it, let it run, and then go to sleep and make money, and then go to the beach and keep making money. That was my first idea of Algos, honestly. But that was still when I was pretty young in my trading career. So I didn't know better, and I didn't know much of the realities of trading at that point. That was probably around, what, 5 or 4 years ago. So it was a completely different me at that point as a trader than what I am now. But yeah, that was my first start into that. And now I am after as time went by, I started to look in them firstly as ways to automate parts, because after failing with those, I started automating parts of my trading. So I made or used an algo that helped me input my trades faster with my system, other that helps me manage my trades and things like that. So I started with like maybe helping to make my work more efficient, even if I'm discretionary. And after you started talking about the trading as well, the building upon reversal strategy that you had, the notifications and that, I was like, well, we could do something maybe better, mixing those two tools of helping me improve and helping that. And then you can have that, and you can have a mix of the human and the algo, and let the algo do what the algo does best, and the human do what the human does best. And then from there, we started working on that, and my philosophy around algo trading changed completely in that point.
Yeah, and I think we can talk about that more later when we talk about kind of how you evolve the strategy and like what things you tweak and stuff. But that's the first lesson. So hard work is going to be required. It still requires work to trade algos. Now, what's the second? And you're going to talk about the second lesson, which is about drawdowns. So how do you know drawdowns? I think it's a hard thing to kind of stay there and stay on algo trading all the time and getting in a drawdown, like losing money all the time. So it's even kind of worse than if you were to do it yourself, because then you think it's yourself, but now you kind of have no way to escape the drawdown. So how did you figure out to deal with those drawdowns with algos?
Yeah. Well, first I would put the difference between having a drawdown when you are trading manually and having a drawdown when you have an algo. Usually when you are trading manually, if you are a diligent trader in terms of you have your trading journal, you know what you're doing and you're following your process, you can see the drawdown and you can see if the drawdown was because you failed your process or the market is changing or something else. So you can more easily identify those things and separate them, and then see like, okay, this is a normal drawdown based on my strategy, or this is because I messed up, right? That could be like the two main things. But if you have an algo trading system and it is fully algorithmic, you are not doing anything to it, then you have to learn and put standards of what is a normal drawdown, what are normal losses per day, per week, per month for the system, for the algo, and what are normal market conditions. And then you have to learn what is that. That can be learned from high quality back tests, gathering statistics and data, and then having scenarios to have that. Because if not, you could have a back test, but you didn't pay attention to the profiles of drawdowns and things like that. And then you could have perfectly normal, statistically normal drawdown, but you don't know if it's normal or not because you don't know exactly like what profile your strategy or your algo has. And since you are not in control of the trade because you are not placing them, you basically are just looking at the results every week or every day that the algo is placing. Then you may not know if it is because the algo stopped working because I programmed it wrong or because it's just a normal drawdown. So you have to differentiate between those three things. And that is also part of the next point of like evolving the strategies and that, which is the process of how do you start your algo, test it and pass it like from like a stair, right? From being a baby algo and test the things, then implement in a demo and then go live to make sure that you have all the data gathered. I personally have a table. I have any tables, you know me. I make tables of Excel like for almost everything. So, so I have a table in which I have my risk limits per day, per week, per exposure. And I created another algo, which its job, it's only managing that algo. So the algo, I manage my algos manually, but I have one algo that basically just alerts me X algo strategy is having too much open risk at the time or too many trades open. And then I go check and it's like, is it open too many because a news event, which would invalidate them, so I have to close them now, or is it normal but not common? I have this many trades open. Same for losses, and then I usually put that parameters tighter than what I know is a statistical normal losses and that, and then I have a risk management strategy around that, which is pretty similar to the graduation plan that we have in the academy. I basically took that graduation plan and modified it to apply to my algos. We have parameters of loss and profit. So I implemented a framework like that into there, and then that's how I manage them in that sense. And as long as they don't pass the normal expected drawdowns from the backtest and a simulated system I have, then if it doesn't pass that, then everything is okay. Right now, you know that because you know more of my trading, and I've talked to you about that. I have been in a drawdown since 2 months ago, and right now my algo strategy and my portfolio with all the algos that are running there are in about almost 8% drawdown up to the end of the last month. And since now I have people investing, some people were like, "Okay, is that normal? Is it not too much? Is it okay?" And I'm like, yeah, it's perfectly fine as long as you follow the statistics. So if we assume that statistics are going to play along in the long run, we are still okay. But it's always hard because if you don't know the things, it's like you're trading other people's strategy. If you don't know what is normal with your strategy, you will always maybe think that you stop working, even if it may still be perfectly fine. And you just need to handle one more month of drawdowns. And then the next month, more likely you're going to have a recovery of that period, which is what I have seen pretty common. And also, like I remember reading one part that when you became a professional trader, when you trade the same during drawdowns than when you are doing well, because that means that you understand and you are able to handle the drawdowns properly, and you are not changing your trading plan just because you're in a drawdown. So you have to do the same with algos, but you have to have something else that tells you that you are doing things right, which could be your statistics and making sure that your code is properly done, because there could be some errors that are creeping up there and that are having issues and making your drawdown be worst, but they are not part of the strategy. They are just code errors, or you did something wrong, or I don't know, your BPS stopped working, or you didn't restart properly on time. So you missed a trade, or it doubled another trade, or things like that. So those type of things are also need to be checked there. So that's the first thing I will check. Like if everything is running okay, and then if I am within standard of the drawdown, then it's okay. If not, I will basically stop trading completely if I'm above the standard, like in terms of drawdown. And then I reevaluate what I'm doing and why am I having this? Is it just market conditions change from the backtest or not, or is it just like my system stopped working as is? Because as you know, in Algos, you have lots of parameters, so you can modify some parameters, and sometimes modifying one parameter can make the whole strategy completely different in terms of profile. At least with the Polygon controversial, we know that it's completely different for many pairs if you have you move your stop loss to break even after the first take profit is taken, or if you leave it like that. So in some cases, it could be that you just need to change again your parameters for different market structures. So you still need to have to do the work, as we talked about before. You still need to do the work analyzing the market because you may have identified, look, okay, this set of settings work first for trading and trending environment, like strong trends. This set of parameters work best for ranging markets, and this set of parameters works best for markets like we have had in the past months, which are choppy, not ranging, and not properly reversing. So you could like have those type of things, and then you just change between that. But it is like, at least for trends, like for swing strategies, it is not like you're going to be doing those changes every day. Maybe for day trading strategies or intraday, you may have to do that for algos, manage them daily. But for swing trading strategies, you may have to manage your algos once a week, once a month, and update slightly accordingly. So that is that. I think that's the way I would go on approaching it. That's the way I approach it.
So that's a good point. So one thing you mentioned is the fact that, and something I learned also in the past, is that we cannot put our expectation in the market. We cannot say, well, I don't want the market to go down 5%, so it won't go down 5%. Like, you have to accept the fact that if that's part of your stats and your priorities in the past, then it's going to come back again. And you cannot force yourself to say, well, I'm starting now to trade algo, so it should be good or should be wrong. And I want to point out the fact that we had someone that bought the trading assistant a few weeks ago that said, well, he's been taking a few trades right now, and the algo didn't perform as expected, so he didn't have any profit. And then he came back to us and said, well, like, there's no profit. And we explained to him the fact that it's not about, like, you cannot force yourself to expect something and have it in the market. It won't work this way. So if you think that the algo will give you profit, it might not. And you have to accept whatever happens and look at the overall picture of probabilities and numbers overall, which is, I think, a big thing to consider.
Yeah, exactly. It is a different way of handling things. But I also think it could be similar, like when you are entering an investment. You're entering an investment, you know the profile more or less of the investment. You know what to expect in possible returns and what to expect in possible losses. Then you expect the ideal scenario to go with the possible returns, but you also have to know that there is possible losses, which could be temporary or not, depending on the type of investment you are. So that's also one thing that could be something that many people that come into trading, we always forget. Many people here, like when they come to trading, they always look to the potential profit, but they never look to the potential risks or losses. And that is also one thing that I think that many people lacks in terms of, like in terms of aligning the expectations. They always expect only the best, but they never expect the potential losses that could happen, and they don't prepare for that. So whenever that happens, it can be really bad, because even though they were disclaimed and they are there, like since the beginning, you know them, they never take them into account. So they just ignore them, and they assume the best and hope the best. And if the best happens, then everything is great because they make money. But if the best doesn't happen, then they are disappointed anyway, because even if it was good, it was not as good as what they expected, which was the best. And if it is bad, then it could be catastrophically, because sometimes people will put more risk than what the strategy is intended for, without understanding the proper, like, the effects of adding more risk. So.
Yeah, cut off for a second, but okay. Were you done with that part? Yeah.
Yeah, I was going to read a question here from Dimitri asking about.
Yeah, go ahead.
Yeah, I know you. The question is basically if we myself turn off the algos during major economic events such as the Fed speeches and ECB speeches. It depends on the algo. For most of them that I have right now, swing trading, no, I don't do that. I don't turn them off for those type of events. I may turn them off for things like last week, the Golden Week in Japan, together. Yeah, well, this week basically. Golden Week together with May Day, Labor Day in most of the world. And then, so you have two different things that will make the market super liquid. Even though they are still open, they will not be normal markets. But since I tested the systems, and honestly, I was too lazy to program something, and it's really, really annoying to program something that will avoid all the economic calendar events in the past in my backtest, then I just basically, I backtested already with that. So in the results I have in my backtests, I already have them included, but I only take away some type of events discretionarily. For example, if there is, you know, with the Brexit parts, whenever there was a Brexit vote, something like that, I turned them off for the GBP pairs because that's not normal markets. Like the backtest didn't have Brexit happening for 3 years in the backtest because we are still in that part, and those are not normal conditions. So in those type of things, I will turn them off. I had my algos turned off for most of the past week. I turned some of them on after the 1st of May. But in the other parts, I just do that discretionarily based on other factors, but not necessarily on news. Now, if this is a day trading algo strategy, then yes, I will turn it off in news, because in all the trading I'm doing in day trading, I will not be sitting down for, you know, FOMC speech or non-farm payrolls, because it's a gamble at that point, and you could be lucky, you could not. So it would be the same as just making an algo opening a random order at that time of news and going to stop loss or take profit for the day trading. But the swing trading ones, the stop losses usually are long enough to allow them. But 30 to 100 pips stop loss, it's good enough to be able to wait during that spikes on normal news events and that.
Yeah. So I guess to summarize this, the rule of thumb is going to be trade like you backtest, but if it's going to make your do, then turn it off. It's going to be better. So, but in general case, you want to not interfere too much with the system.
And another thing you can do is run the algos in 2 accounts. You have the live account and a demo account in which you run it always. As you do, I think you think you do that, right? I think
so do that. Yeah.
So you just have the algo running and taking every single trade that it can in one account that you're tracking to see if I kept doing that, what would have happened, and then you can know, like, oh, maybe it is actually better to not turn the algo anytime, so I would just leave it running, right? So that's another option. I also do routinely every 3 months, I do a back test of whatever pairs I have been trading with the algo to see if my back test for the same period has the same or equivalent results to my real trading. Because if it is not, then it could be a problem in programming, or it could be a problem of platform or broker, or just, you know, market conditions were different, or I moved the algo, or I messed up with it, so it didn't have that. So usually, if you have an algo trader, you would like to have, like, your back test or the period, let's say last 3 months, should be almost the same to the trading that your algo took in the past 3 months, unless you made some changes to the strategy in the process. Exactly. So that is something like also tied to identify issues.
Mm-hmm. I think I want to jump to the jump into either manual or algos, and I think one of the big reasons that they don't succeed long term is that they go with something, then they stick with it for long term, expecting it to work all the time. I found that there's a lot of work you can do with evolving your strategy, so finding ways to improve it. Both Ariano and me have done things like the past. We note down, like, how we can improve the strategy we have, how we can tweak it, and then we test things out one by one. Like, is it better? Is it not better? And kind of see what filters we can use for the strategy. And that's, I think, very useful. You can kind of figure out what can make it better, and sometimes it's like these unusual way that kind of make a big difference. So small things that you didn't think about can make the big difference. So I know you're testing something with different take profit or stop loss, and you have some different filters too. So how do you do this? Like, how often do you go back and do you review these things? Do you test these things out?
Well, honestly, it depends on many factors, but sometimes I may talk with another trader. Well, recently we have been talking with Sam, one of our students.
Yeah.
And then sometimes people see something that you didn't see, and they will just like say it out. I also, in some of the trader meetups that we sometimes have like some random idea of someone, and I'd be like, maybe if you can, like, I can try to apply something like that into this and see if it works. So sometimes it's just literally random ideas that come from either the internet, some other traders that we talk to, meetups and that, and then it's like, it would be cool to try to integrate it. And then the first part is see how hard is it to program. If it's to program, then it is not much problem. So I can just use a few minutes, program it into there, and then use a few hours to a day to test that and see quickly, does it kind of work, does it doesn't work? And then that's it. But also one thing that I find valuable even now is going back and doing one test manually or visually of your strategy, because that way you will notice some patterns sometimes, and then you will be like, maybe this type of things. That is how Sam came out with some filters right now testing, and those type of things can be more valuable, especially since I come from the value from a discretionary trading price action style origin. Then for me that is pretty natural to do, like always look to the charts, look for patterns and that. So I like to have the visual mode to test the things, and then talking with traders like Michael Thoma, and then he tells me like, okay, I have this type of strategy and does this, and I'm like, maybe we can use this filter also for my strategy that I for swing trading, even though he uses that filter for day trading, but it can be applied for swing trading. So there are many things that can be applied across different strategies, and then it's just a question of coding it and testing it, and that is how I approach it. And I don't really have a fixed schedule. Like every 2 weeks, I have to test something new. You know, it's like I have a new idea or something came up. Okay, let's see if it works. Let's see if it doesn't work, and think like that. And sometimes I try to like take 1 week without doing anything at all, just letting the algos run, because sometimes it gets tiring. But also that shows the part that even if you have an algo strategy that is already working, you never stop working. You keep developing the strategy. You keep journaling, checking, okay, now it's performing like this, but what if I did this? Will it be better? Same as if you were a discretionary trader. You have your trading journal. It's just a different way of doing things. You have your trading journal as a discretionary trader. You note, like, I have seen that whenever I get stopped out quickly, there is a big move before I enter my trade against me, or it just moves like that, something like that. So there are some patterns you could start looking at, and then you can use that to improve. The same for algo. It's just slightly different parameters and different way of testing things out.
Exactly. We had a quick question in the chat from Gerald about what platform you use to program the algo. I know you are using, well, of course, MetaTrader 4 to run it and to kind of put the code there. Are you still using the software with the broker that was helping you to code it, or no?
I stopped using it probably at the end of last year. I still sometimes use it just because they have some pre-made code that it's just like go and grab the code, copy paste it, and then add it to my thing. When I don't have that code already, but I know they already have it done. But yeah, the platform that I used before, it's one called Forex Pro Quant app. It is a free online app. It is a bit outdated, so the way of writing the code that the app spits out, it's the way of like 2014, 2015 MQL. So MQL4 is the programming language of MT4. So I'm programming everything for MT4. That is what I learned right now. And that software can help you to just you put the logic visually, and then it spits out the code. It looks terrible. As a programmer, if you look at the code, it looks like just like a bunch of code.
It's pretty messy, yeah.
I just spit out the code. The logic and everything is correct, but it's not something that you will be able to down the line modify manually to update it. So what I did with some of the strategies, I first coded them there just to make them quickly and while I was learning to. And then I now start making different code blocks. So I have already like some pre-made chunks of code for different things. And whenever I need a pending order, I already have a block that I just copy paste. Then I change the conditions on top, the if condition, like if this happens in the market, then open a pending order. And I just start changing the things. So I already have like my own layout. It's not a standard layout because I'm not a programmer per se. I never learned programming formally. I learned by trial and error, by using this thing to see the thing, and by reading a lot, like reading the forums and reading the documentation of the programming language. So that is how I learned. Other thing you can use for MT4, at least for MQL4, there are lots of codes already made out there that are open source in the MQL4 community. So many times, if you don't know how to do something, you can literally just Google what you want to do, space MQL4. And that is enough to have at least a couple of examples of code which you can copy paste and then just modify with your things. And then that is how I did it before. Now I'm a bit better, so I know like I have already most of my codes made. But it is pretty simple once you get a handle of it. It's just mostly learning the logic and learning the words, which I think that's the hardest part for most people. The logic part, how you translate our logic, human logic, into computer logic, which has to have a different type of procedure of working. Because, for example, if you tell a human a moving average crossover, then it's just a moving average crossover. But how it translates to logic, it translates into 4 different pieces. You have the slow moving average and the fast moving average in period 1, or the past, and the moving average in the period today. So they have to have certain conditions, which is not something that most people are used to understand or to think of, but it's the basic of how you can like do the coding. And then after that, it's mostly just learning basically a dictionary of the words that the programming language uses and the functions.
Yeah, awesome, cool. Should we talk about so scaling up? So this is something you want to kind of share. So the process of like, and this is something tough. So how do you choose when to go to the next step? How do you choose to go from demo or from testing to demo to live to then scaling up to like more money? How did you figure out, how did you do it yourself? And like, maybe you can share how I did it if it's different, but I'm curious to see how you did it first.
Well, in my case, I first started testing a strategy. Then when I tested the strategy optimized, I will talk about the swing trading strategy I have before joining and working with you.
Okay.
So for that one, I first tested it, then I optimized it a bit, then I did some testing. I learned about over-optimization and those type of things. So I made sure to not over-optimize it and that. Well, I think it's not over-optimized, at least the procedure is supposed to be the one that you should be following. In that sense, so once I was satisfied with the testing procedure and with the results that it had in terms of parameters to expect, then I always ran. I just do big background. I don't focus on maximum profit or minimum loss. I focus on the best risk adjust return. So basically, I run a test and then I calculate my profit over my drawdown, maximum drawdown, for that whole period. And that is how I classify a good run versus a bad run. I still look at the equity curves because I don't want to have like one that is just really good at the beginning and then a loss all the way later, like for the next 5 years. That is also not good, even if it still has a good performance in the other sense. But I check different parameters. I check all those things. Once I like that, then I go to demo, because even though in the backtest you can weed out some programming errors, there are many errors, like for example, the way you send the order to the broker may not be the adequate. So the tester doesn't care about the way you send the order to the broker, because it just accepts every order and places it in the backtest. But your broker cares about how you send the order to the broker or the timings or things like that. So you could be blocked out of your broker platform if you have a strategy that is like hammering the broker a lot. So there are some things that you have to consider in there that you may not know that they are a problem until you are actually trading in real-time markets. Also, the impact of maybe your VPS stop working for 10 minutes, things like that. What happens if you have an open order already and then you have to restart your VPS and you have to restart the robot? Will the robot take the order and see its order and it will not open a new order? Or will it see like, oh, the conditions are still met, okay, new order, and things like that, which could be a problem, right? Because if you have that, then the robot may forget that it had another order open a new order and do something else, and then you can have an exposure that is not going to be managed, right? If it has trade management rules and things like that. So things like that you may not think of at the beginning, because in tester, they never happen. In real life happen. In real life, you have crashes, you have to restart your server. You have days of the week in which maybe you lost connection to the server for some reason. Your broker had an issue with MT4 temporarily, and then you have to like get the backup or something like that. So those type of things are usually found out in demo. And then after I'm sure that all of that is okay, I'm not going to be losing. Well, actually, I did actually lose like 3% of my account in one day because of a programming error in live. But once I always try to make sure. Once I make sure that doesn't happen again, then I'll go to live. That case, what happened was that I updated the code, and since everything was okay except the part I updated, then I assumed everything will be okay. So I just went into live, and then the next day, the part I changed of the code to update was one of the parts critical to the trade management. So it just kept opening trades and trades, and then it didn't work that well. So I lost like 3% of the account in one day because it opened like 5 trades, one after another, because of my error. So those are the type of things you would usually see in demo, because if you keep it like demo, then you will see, oh, it's opening 5 trades. But at least it's just demo money. That you don't care about demo money. It's just, for me, demo is mostly to check that everything is working well and I will not have critical errors when trading live. Also, because now you know that I am trading with those strategies, clients' money. So like I may be okay losing my own money in a small account, but I'm not okay losing my client's money. My client's money is sacred. So if it's a loss for the client's money, it has to be a normal loss within the strategy and not an error because I forgot to put a comma or I changed a more than to a less than in a code.
Yeah, because investors won't take this too well. If it keeps happening long term, like all the time.
Yeah, well, they may not know, and you may be able to tell them like, well, just something like that. The market conditions. You may be able to blame it to something else, but it's never a good practice to lie to your investors.
Of course.
And and ideally you want to have everything tested. And if you are testing something with the investor, then that may be part of your responsibility as manager of managing those risks, right? And you may be like, okay, testing with this account may have this risk, so it is within what I explained to investors that they have the risk, so it's acceptable. Or if it's not within the risks, because some investors may want experimental strategies sometimes because they have more profit potential, right? But they are going to accept the losses. So you have to handle it a bit different because you have someone else's money in the line. So there are different responsibilities in place.
Yeah. If you have a new question, you can comment in the chat. We'll make sure to answer your question just after. I want to share one lesson, which is lesson number 5, about something I learned about Algos, and that's kind of tied to what Alejandro talks about before, which is the fact that there's going to be tough times and times when like things crash and don't work well, and you got to be willing to kind of step away and still work on it, still kind of master your craft. Because like oftentimes we feel discouraged, we feel like we don't want to go forward, and it can work for Algos or manual, whatever. But you feel like you want to go forward because like things happen, like things crash. But you got to be willing to put this aside and learn from them. Kind of learn how you can make this better next time. And that's why having a journal of like your experiments and things you try and things that fail and that work, keeping this is useful. Like keeping this moving forward is useful. Because I found that the reward that you get from Algos is much more than the pain of like making it work. And even though it's gonna take some time, it's gonna take some effort, it's gonna take a while to kind of get there and having everything straight, and maybe everything won't ever be straight. It's always gonna be some things happening, some problems. But when you make the decision to work on that and not go back to manual, you kind of get to experiment breakthroughs and things that you wouldn't see. Also, yeah, sometimes like you lose for no reason, or maybe like me, you have a script that doesn't work, or maybe like things happen. So you just gotta keep moving. I think you gotta keep moving forward with that.
Yeah, exactly. It is. You have to also like they have like something to. Maybe sometimes it has to do about having different strategies and being able to know, okay, in these market conditions, this doesn't work, so I stop using this, and I keep working on improving this meanwhile, but I have something else trading.
Yeah.
As many in the academy know, I haven't been trading manually for the past 2 months because I have been focusing on the algo parts, but they have been trading for me and they have been doing their work and they are doing within standard.
Exactly.
So that's also part of helping in getting some freedom if you have swing trading strategies. Like you don't depend only on yourself. You also have the support of your algos, and you can still trade manually in their extra, but you have support. It's like having a friend also trading in your account. Well, you know how well it trades.
How do you feel in the future? Because I don't think I've asked you this before, but do you feel like you want to keep doing only algos, or do you want to combine algos and manual?
Oh, well, I have been doing only algos for now, in part because that's what the people that I started working with asked for at the beginning, and in part because I haven't been in the state of mind and I have been occupied with many other things. As you know, I am planning to move to Macau by the end of the year. So I have been planning some things on that, and it's always focusing on other things. So it's a bit hard to focus on trading manually. But I would want to have a mix of my algos plus my discretionary trading, and then having those and them together, because the algos do what they are programmed to do, and they are conditions in which they are not so great to work with. And also my discretionary trading has a different way of adapting to the market conditions because of the way I trade. So in those cases, I can just do my risk management decision of, okay, reduce the risk for the algos for this period of time because we are not in good market conditions for this strategy that I have at algo. And then I trade manually. I still enjoy trading manually. I enjoy the analysis process. I enjoy that. And I enjoy day trading and swing trading. So I would not like to let it go completely because I like it. But in terms of freedom, sometimes it's like maybe I would like to some months just let the algos run alone and I don't trade anything, just the algos trade by themselves. And then I can have like basically a holiday in which I am resting and I have a holiday for myself, but the algos are still working, so the accounts are still being operated properly. So I like the mix because I like the business, I like analysis, I like doing these type of things, I like trading. So ideally for me will be a mix of both. Also because I come from a really discretionary method, which is extremely hard to program. I don't think I will ever be able to program my trading strategies discretionary into an algo. I can develop algos to help me manage out some parts of the positions, but I don't think I can develop algos to replace completely my discretionary trading. So I like both, and I will put the strengths of each one in the portfolio. And also, if you think it as a risk management perspective, if you have a hedge fund, usually hedge funds has lots of traders because they are distributing the risk between different strategies and different traders. I can do the same with my algos and my discretionary. I just distribute the risk of the strategies to try to get a better, like a more diversified portfolio inside my accounts between the algos and my own discretionary trading.
Yeah, it's awesome. So I think what you said there is key, like combining the best of both. So the best of manual, which is like you putting maybe some zones in the market or something different, and then the best of algos is like really systematic and like always doing the same thing, which is really powerful. Quick question from Dimitri, and I think we can end here after. So Dimitri says, what is the average hold time of your algo trades? Minutes, hours, days?
Well, the main algo that right now is running the most amount of trades, it's the BBR in my portfolio, and that takes from a few days to maybe 1 or 2 weeks. That will be like the average. I have a swing trading strategy which sometimes takes from a couple of weeks to a couple of months, and a short-term, like short-term swing trading, which takes at most 1 week. And then I am currently developing a couple of algos for day trading, which the average trade time would be 5 to 15 minutes. So it depends a lot. It will be pretty similar to asking a trader for each strategy, because it will depend on each strategy that the algo is following, not exactly like the whole algo thing. So you can make algos that are working for seconds and are scalping for 1 pip, 2 pips. Or you can make algos that are going to be position trading algos that are going to place trades based on fundamentals. Like you can do that if you want. You can put the fundamentals and then the algo decides and then takes a trade that is going to last for the next year or two. But you can make any combination and any time frame in there. But mine personally are mostly swing trading strategies, but I'm also currently developing day trading because I want to have also a portfolio for my clients, which is swing trading, normal risk, and a high risk day trading portfolio for my clients. So that's why I want to have both, but right now it's mostly swing.
Yeah, interesting. It's awesome. So, guys, I want to thank you for being here today, watching us live or watching the replay. If you're listening to the podcast or something else, thank you for watching this and listening to this. We'll put the link below for the trading assistant, which Aniello and I developed and worked together still for that. We have some awesome progress coming out the next 2 weeks. And we have the academy also if you want to learn more about what we do and learn from us and be in the mastermind calls every 2 weeks. That's going to be linked below as well. So, any last word of advice to finish this off?
Well, that caught me off
That's on the
guard.
spot. That's really on the spot. Sorry about that.
Yeah, I didn't expect that for this time. I expected it last time we had a call a chat like this, but not this time. Well, in terms of like algo trading or things like that, what I would advise people would be, you basically have to trust your stats and your process. If your process is not properly done, then you cannot trust the results that come from there. So if you're going to develop algos and test them, make sure that you are testing with high quality data, make sure you are following a correct process, and you are not entering into those statistical pitfalls. Because we have all seen, those algos robots that they sell online that have extremely good results, and basically they are just manipulating the settings and that to be able to have the best backtest, but that is not going to be able to be reproducible in the future. So basically follow the process, keep the process doing well, make sure you have good quality data, and because in the end, you're going to have to trust that data in order to let your algos run. And if you don't trust your backtest and your data, then it's like you don't trust your own trading. So it's the same. So you cannot really trade if you don't have trust on what you're doing. So that would be my last piece of advice on that part of algo trading.
Yeah, so you can either do it right and take some time to do everything properly, or do it half-assed and not see the result. So you decide. Thank you guys for watching. I appreciate it. Give a like and a review if you liked it today, and we'll catch you back here pretty soon. Ciao.
Bye.